Though the room has not heated up yet, I get the impression that the discussions are getting heated up. We just heard goodwill to be amortized or not, who cares? So I'm proudly announcing the next speaker, who is Andreas Barckow. And Andreas Barckow, as you know, is the International Accounting Standings Board Chair. He's an experienced and highly regarded leader in the field of international accounting. He served from 2015 to 2021 as a president of the Accounting Standards Committee in Germany. He's an active participant in numerous advisory bodies to the IFRS Foundation and the IASB. A long time ago, he was also linked certainly to Deloitte in Germany. He has a doctorate degree in business administration, and he is the honorary professor of the WHU Otto Bischheim School of Management. I met Andreas years ago at the EFRAG, and in the homage to Jean-Paul Gauzès, I have to admit that Andreas was the vice chair at EFRAG board when Jean-Paul was, of course, the chairman at that time, so he could translate everything into German, which was easy because Jean-Paul spoke excellent German. And when, of course, Andreas moved then to the IASB, I became the vice chair, and since then we translated everything into French for Jean-Paul. Andreas, the floor is yours. And the topic will be, of course, the roadmap of the IASB as far as intangibles is concerned.
Thank you very much, Hans. I think I have a new title now, Head of Uselessness, right? So I could rightfully claim it wasn't my fault. Actually, I've been on public record for more than 10 years that the area of intangibles is broken and needs fixing. However, if I just saw Pietro's slide with enlisting what their key intangibles are, I think it probably would have frightened the horses of Baruch and saying, let's put this all on the balance sheet. So I think if the last 3 hours have demonstrated one thing, is we all agree that this is an interesting topic that requires fixing. What the last 3 hours have also demonstrated is that there is no consensus whatsoever as to what should be fixed and how. And that is exactly what the IASB received as a key feedback on the agenda consultation. Every 5 years, we tap the market and want to listen from our stakeholders as to where they think we should be deploying our resources. And there was a unanimous support for us taking on the issue of intangibles, very much to my liking. But if you read the individual comment letters, people were across the entire board. They didn't know how to actually specify what should be fixed, other than you probably have to revisit, maybe rewrite, maybe amend IAS 38. So where do we start? Let me say by starting, we haven't yet started. And that is not that we believe that this is an unimportant issue. It's merely that we have said we will put this onto the agenda and devote resources to it as soon as the resources become available. We are about to finish 2 big standards in the second quarter of next year, IFRS 18, IFRS 19, one being primary financial statements, the other one subsidiaries without public accountability, disclosures. And as soon as that happens, that will free up some resources that we then intend to be redeploying to both our intangibles project and the other project that we've promised to take on, being the statement of cash flows. At this stage, we don't have a clear path as to what we will be doing, but let me take some of the comments made on board. Firstly, the objective of financial reporting is to present decision-useful information to investors. It's a single stakeholder approach, to use a modern terminology, right? It's not to make the world a better place. It is to give users a good guidance at the end when they make investment decisions. That's our yardstick. That's not to say that we should disregard the information needs of others. But what it says is that is the remit of the financial statements. If you are looking for other information, go look elsewhere. Don't look for it in the financial statements. And I would just want to re-emphasize that, and I was absolutely happy, Ian, that you made that comment. There's a role for the financial statements. And if there was one consensus by most users that we have spoken to, is don't tinker with the financial statements. They may not be picture perfect, but the thing is running and is enabling us to do a cash flow projection. If we want further information, we get it outside of the financial statements. We get it through one-on-one talks, we get it through management commentary, we get it through sustainability reporting, you name it. Don't tinker with the financial statements. And we take that quite seriously. So the first thing that our board will do is what academics say is the definition of the problem. What is the problem that we are going to fix? What is the problem? And secondly, is that problem for us to be solved? It could very well be that part of that actually sits with our sister board. And I let Richard talk to that later on. And it may also be that some of the equation actually may be neither for him nor for our board. It may be actually for others to fill the gap. So define the problem and define who is going to solve the problem is the first part of that project. I welcome any piece of literature, any type of research that you can give me, but please stop sending project proposals to me that says, we believe there's a problem with intangibles. That's no longer news. I knew that. I've known that for at least 10 years, right? So don't tell me that there is a problem. That's the thing that we know. What we don't know is what's the state of intangibles? What intangibles are there? Is there a repository? Is there something that would tell me what the significance and the prevalence of intangibles in the 147 jurisdictions that we serve is? And let me make that abundantly clear. You may all be here in the room and saying, well, it's clear for us in Europe. Good on you. But the WICI's mandate is that of a global standard setter. Europe is absolutely important. It's one of the most important stakeholders that we do have. But it's not the only one. And we carefully need to listen what other stakeholders have to say as well. And don't be fooled that others have the same view of intangibles that you have. There is no homogeneous view whatsoever. So after the problem definition, we need to actually try to find support. And I'm not as foolish to say we will reach a consensus. This will always be a hotly debated topic. I don't know, Ian, whether it will be as hotly debated as goodwill, right, which I completely agree with you, is a religious debate. You're either in favor or against it, right? And the needle rarely moves. But is the future really to bring more intangibles onto the balance sheet? If I turn back to the users that we have spoken to, and we can't claim that we've spoken to each and every one, a majority would say, don't do that. That's our job. Don't bring them onto the balance sheet. Well, if you don't bring them onto the balance sheet, arguably, the balance sheet is incomplete. And if the balance sheet is incomplete, the income statement must be incomplete as well, because you don't see any depletions of that either. So your performance statement is wrong as well. That seems to suggest that in all favor of 600-year-old Luca de Pacioli's rules, if you want it right, you probably have to think about whether you bring some of that onto the balance sheet. But then the question is, of course, if we could agree that we bring it on, what should be the measurement attribute? For a long time, an IS 38 is coming out of a cost system that said you record the things at cost, but only after you've met a certain threshold. Well, by that time, and Ian would be placed primarily to actually say, well, by that time, probably the majority of the cost has already been incurred and expensed, so there's nothing more to actually be recognized. If we follow his approach as to this prescription and the number of medications given and the margin being earned, that seems to suggest that's more a current measurement attribute. Do we want to go for that? And if we say, well, neither is the right thing, then could anybody please explain to me the difference, why we have different recognition and different measurement thresholds for intangibles than we do have for tangibles? Nobody would come under the impression and say, if I were to build a machine, we only start capitalizing after 2 years. We do that from day one. And if we err on the wrong side, we have an impairment. Why can we not do the same thing for intangibles? I'm not saying this is the likely course, and I certainly can't speak for all my 13 colleagues that probably would declare me foolish, right? in doing so. But I think we have to really think hard as to what the right measurement approach should be. But in terms of, is there anything that we could do in the interim? Could we make some incremental value to at least increase the transparency about the array of intangibles that do exist? I think there is a road for disclosures. That's not to say that we use disclosures as a substitute for bad or broken accounting. I don't think so. But I think that we could use disclosures as an interim measure to help us actually increase the understanding of the markets as to which intangibles are being used, are being employed, are existent in entities for markets to develop. And I've just taken a brief conversation with Stefano in the break and saying many of the topics that we are debating today, we have debated at the second WICI conference already. There is no inventory as to the intangibles that exist. And if there is no inventory, we shouldn't be surprised that there are no values attached to the intangibles either. Same issue. And if you wonder why the accounting is broken, it's very much for the same reason. Most people could probably agree to the fact that we should recognize the intangibles. Where we all fell apart is at what amount. So there is a lot to be said about this. Watch the space. I can't project you any solutions. I think I want to just re-emphasize what I said at the outset. Don't look for the financial statements to be the all-encompassing Encyclopedia Britannica for intangibles. That will not happen, at least not under my realm. And if you think I'm therefore an impediment, there is an Italian way of dealing with these, yeah? Then we should be all looking for other measures. I'm happy to take any questions. Thank you very much. Hans, Stefano, back to you. Thank you.
Any questions? Surprisingly, Ian Bishop has a question.
Ah.
I don't know why, but
Yeah.
I didn't expect really that. Ian?
I come all this way, you didn't hear enough. Just on the scope of the project, is IFRS 3 consequential amendments that potentially in scope? Because we talk about accounting not being solved from Italians from 600 years ago, but IS 38 specifically bans certain internally generated intangibles being recognised, and IFRS 3 specifically requires that they are recognised. So there's a clear disconnect there. And sorry, that's on the ISB. Is IFRS 3 in scope, or are you just looking at 38?
I would say that we probably start with 38 and doing a post-implementation review, my words. Whether there will be any knock-on consequences, we will have to see. But you are absolutely right that IFRS 3 establishes a completely different paradigm. Once that you pass a buck over the table, then obviously all the things that magically weren't there somehow appear, right? I would agree with you. I think if you want to bring consistency between companies that grow organically vis-a-vis those that actually grow inorganically, then you should be thinking about actually treating the self-generated and those that have been acquired the same. By the way, our colleagues on the FASB side have exactly the same idea, but they don't know how to do it. So I'm happy to steal any wise ideas that you may have to suggest, but I think to your question, the narrow scope is clearly IS 38 to begin with, and that's a big scope already.
Okay, thank you very much once again, Andreas. Thank you, Hans. It's time to move and to the final session of the morning. Can I invite Elko van der Enden, from CEO of GRI? Can I invite Professor Richard Barckow with me? And hopefully there should be Patrick de Cambour. Yeah, they give me a great thumb here. Good to see you. Hey, Patrick is there. Okay, so hello, Patrick. Can you hear us well?
I hear you very well. Do you hear me as well?
Perfectly, perfectly.
Splendid.
So, you know, it's like back to the family in a sense when I see these faces around me. And